Good morning, ladies and gentlemen, and welcome to the LMS Capital PLC Annual General Meeting and General Meeting. Throughout this recorded meeting, attendees online will be in listen-only mode. Your questions are encouraged and can be submitted at any time. Just type your questions in using the Q&A tab on the right-hand side of your screen. Thank you ever so much. I'll now hand over to the management team. Good morning to you all.
Thank you so much. I'm Jamie Wilson. I'm chairman of the board. Good morning. Welcome to the 2025 Annual General Meeting. Today we've got two meetings, the Annual General Meeting and a follow-on General Meeting. So this is the first meeting. It's our Annual General Meeting, which will deal with the regular business, including consideration of the annual report and accounts, the remuneration report, the re-election of directors and the reappointment of the auditor, and granting authority in relation to the issue and buyback of the company's shares. You may be aware that we put out a brief announcement to the stock exchange this morning covering some of the matters we want to update you on today. There's copies at the back, but it's essentially covering everything and making it fully available to the market that we want to talk about in the meeting today, so you'll hear it from us directly. It's now 11 a.m. And I declare the meeting open. The AGM is being broadcast today through the Investor Meet Company platform to accommodate shareholders who are unable to travel here in person. Those of you who've joined us via that platform are observers at the meeting rather than legally participating. First of all, I'd like to introduce the board. As I mentioned, my name is Jamie Wilson, Chair. Nick Friedloss is on my left, running the company, as you know. Robbie Rain on his left, who chairs the nominating committee. To my immediate right is Graham Stedman, who's Senior Independent Director, also chairs the remuneration committee. Next to Graham is Peter Harvey, who chairs the audit committee. We also have Lorraine Young here, representing IQ-EQ Secretaries, the company secretary. We did not, correct me if I'm wrong, Lorraine, receive any questions in advance of the meeting. However, there will be opportunity, and we'd encourage it for you to ask any questions. It says here in my script after the update, but I think we'd very much welcome questions along the way, if anyone has them, and we'll try and address those as we go through the meeting. And the directors will also be available after the formal meeting for any questions you have. Our most recent NAV announcement was released on 22nd of April, giving the figures at 31st of March. Expect the next one to be released with our half-year results at the end of July. You'll also have seen our announcement about the proposal for a managed realization strategy, and that is what you'll have the opportunity to vote on immediately following this AGM at the general meeting. However, before we get to the formal business of the AGM, I'd like to provide a recap of the board's recommendations to adopt a managed realization policy. And I'd like to talk about why we as a board reached the conclusion to recommend a managed realization, the shareholder consultation that we then had, and leading to the proposal for the managed realization that you'll be asked to vote on at the general meeting. So, Nick, I'd like your help and chip in on this, but the board has been feeling for some time that we have the problem of being too small. We obviously have the problem of the massive discount at which we're trading, and we have illiquidity for shareholders in that context, and none of that has abated. So we have reached the conclusion, really going back to February timeframe, that it's time for us as a board to act on that, and so we put out, as you saw, the announcement of a shareholder consultation process. We discussed this extensively with shareholders during that roughly 2-month process, and the conclusion was strongly in favor, really unanimously by shareholders, to go forward with the managed realization. So they were confirming our views on a board on that. They encouraged us to do it as an orderly process to maximize shareholder value rather than rush it, but they were all in favor of moving on that process. So that's what the combination of our own views and the strong shareholder encouragement is what has led us to the recommendation for a managed realization that you'll be asked to vote on at the general meeting. So that's the broad picture on the managed realization. I'd like to touch on an aspect of that as well before handing over to Nick Friedlos for a more detailed review of the portfolio, which we'd also like to cover here. And that is the initial distribution. We have proposed an initial distribution of £1 million, as you've seen in the circular, and that is smaller than we would like, and it's smaller than many of our shareholders would like as well. So I want to talk about that and our thoughts on that. There's really the context is that we have roughly £12.5 million of cash in the bank today, and we're only distributing £1 million of it. We are reserving the balance in really context of three factors. One is our a reserve for a possible follow-on investment in Dacian. The second is a reserve for a possible refinancing of the debt at Castleview on our retirement living sector. And the third is a reserve for costs. So I want to just touch briefly on those three things and give you background, and you'll get more background from Nick in his remarks. On Dacian, the context is that we have brought in a new management team. We've brought in a new group of supervisors led by senior executives from Hunt Energy in Texas, and we're in the process of doing a deep dive review of the business and its prospects, with that, as well as a major reduction in force at the company to reduce the workforce there. We have not finished that process, but the initial view we're getting is that an additional investment is likely not just to stabilize the business, but to give us the moderate production improvement that the team is working on, that we believe, combined with the opportunities that the new team is seeing for a more extensive workovers that could likely be financed with third-party money, would line up the business to be materially more profitable and more saleable with that investment. And so we have not made that decision yet, but we're in the process of going through that analysis. That is on Dacian. On retirement living, we have 2 million, I think, Nick, of
Yep.
of debt outstanding on Castleview, which we expect to pay down with sales over the and Nick will go into more detail on that over the balance of this year. But we're actively considering refinancing that debt, particularly to give us the flexibility to be able to rent the remaining roughly 8 units, and we think that would be enhancing of value on the business to do that. Thirdly, on costs, our operating costs last year were, I think, Nick, 1.7 million in 2024. We're going into this managerialization roughly with we're not setting a fixed time frame on it, with an objective of a roughly 2-year hold. And we are actively working to reduce our costs. We have a goal to reduce our operating cost on a run rate basis to roughly 1.25 later this year, and we're working on that. But in the meantime, we need to reserve until we've done all that for an appropriate level of cost for the period of the managerialization. So those are the 3 elements that have led us to this more modest initial distribution than we would like, but we hope very much to be able to accelerate from here, not just generally, but also potentially in the course of 2025. So that's a brief thumbnail. I'd like now to, well, first of all, I'd like to ask if there are any questions on all of that at this stage, and try and answer them. And otherwise, I'm going to ask Nick, before we go on to the formal part of the meeting, to do a review of the portfolio generally in the context of the managerialization, on which we'll be asking for your vote in the next meeting. So any questions at this stage, please.
I'm not sure what the question is, but a statement is that the cost for the company of its equity at the moment is quite high, if you look at the share price. And in terms of what I think I understood, so maybe the question is, have I understood this correctly? With Castleview, you've got some units where you're going to have a choice between selling at a price which is below what you perhaps aspire to, or refinancing the debt and renting it with a view to selling a bit later. All I would say is that seems to me, if you've got very expensive equity, quite a finely balanced decision, because if you can take what might be a small discount on what you expect to get on your unit sales, and you then give the money back to shareholders are selling at a big discount, I think shareholders are probably better off. So I don't know if there's a comment on that, but
I think Nick, why don't you want to address that?
There are a couple of things here, Blake. First of all, the sales rate. I mean, in this sector, sales rates are slow. They've been slow at Castleview, but I don't think they've particularly been slower than they are anywhere else. So, and funnily enough, I think chipping the price or accepting a bit less doesn't really. It's not a price issue. It's about the housing market generally. It's about the difficulty of that big decision for people and so on. So it is a slow process. What we'd like to do is to probably refinance the existing debt internally. Carry on selling units where we can, but what we would then be doing is trying to put in place a refinancing, an external refinancing, that as we rent them, we would be able to effectively repay LMS. So in a sense, the LMS refinancing would be a bridge to either selling the units, and there are currently 5 units reserved. 2 of them we hope will complete this month, and the other 3 will complete, we hope, in the the balance of the year. Things are never complete until they're complete, and they do fall over. But I think we will sell more units. But we think it's actually in everybody's interest, and actually also from the residents at Castleview, because it's better to have a fuller village than a village that's not full. So we would be left with about 8 units. There's actually quite strong rental demand. So we think, you potentially got the opportunity there to create a full village, to refinance. So once those units are rented, to effectively repay LMS. So LMS could end up with a relatively small, by the time everything's either rented or sold, could end up with a relatively small incremental capital in Castleview, and quite strong returns on that, because at the moment we're carrying the cost of those empty units. We will get the service charge income in, which I think the residents in Castleview would like to see us doing. So actually the economics of it look quite good, and I think if the plan works the way we'd like it to, you actually tie up a relatively small amount of capital in the longer term.
So is it the case that of the £5.2 million facility, you'd expect the 5 units that complete to pay a chunk of that off?
They will.
And
yeah.
so it's actually a smaller number that you're looking to.
Correct. So if the 2 that go through this month should more or less take that down by £1 million. The other 3, if they go through, that will take it down by, slightly more than that, actually.
Thanks.
Nick, I've got some investment questions, but if you're going to cover them, I will control myself.
I missed that.
I said, is it?
Oh, well,
going to talk about investment.
He is.
Yeah.
Do you want?
I'll just control my
Okay.
enthusiasm.
All right. Right. Nick, why don't you go ahead?
Okay. Well, thank you, Jamie, and good morning, everybody. It's a relatively brief comments. Very happy to chat outside of this. Jamie's covered some of this actually. So I think in terms of thinking about the realization prospects for our portfolio, you need to think of it in sort of 3 distinct segments. So first of all, there are our mature investments, which total around about £7.5 million. These are investments that we've had for quite a while. Most of them date back to pre-2012, in fact. And there are 3 principal holdings in that group. One is the Weber Fund, which is just over £2 million. This is a fund of US micro-cap listed stocks. There's a total of 9 holdings in that fund. It is, of all the assets in the portfolio, it is the most readily realizable because they're all listed. We have asked the manager there to review it through that lens and propose to us a strategy and timeline for realizing them. Some of these assets, not all of them actually, but some of them have been buffeted around a bit, unsurprisingly, by macro considerations. And I think we really just want to look at them case by case and say, is this one to sell now? Is this one to wait? And let's see what happens. So we've asked the manager to come back and give us his thoughts on that, which we will challenge and come up with a strategy.
But we could take that money out.
We could
really
take the
at our
money out within a
discretion,
month
in
if we
part,
wanted to.
in whole or part.
We could. There's no restrictions on our ability to get that. It's a question of what the most appropriate strategy would be approach would be to optimize the outcome. The other legacy asset is Opus Fund, which is just over £3 million. This is an early stage US technology fund originating back in 2008. It has two principal remaining assets, both of which are fully funded and to an extent mature. The manager is actively seeking to exit the remaining assets and wind the fund up. We speak to him regularly. I guess a bit like us, he doesn't want to rush the sale and leave too much value on the table. Equally, there is always this tension about how long do you carry on trying. At the moment, we're happy with his approach. this is a fund interest. We're very mindful that it could be realised in the secondary market if we really wanted to do that. But and we keep an eye on that. We think that at the moment, secondary market pricing would not be attractive compared to being patient with the manager and allowing him to deliver an exit for us. And the third asset in that, the third principal asset in that group of mature investments is eLateral. This is a software company which operates in the marketing technology sector. We own about 60% of that business alongside two co-investing directors who put cash in the last few years alongside us. The company has a very good product and a very solid base of big corporate customers that use its product, Hilton and Marriott and Enterprise Car Hire. It's quite well established in its sector, and we are actively looking at opportunities to realise that. So I think on those three assets there is a plan, and I would expect to see something happen in the next, certainly in the next 12 to 18 months on at least some of those. Then obviously the second sort of asset to think about really is Dacian, which is some 9 million of our net asset value. And Jamie's already talked about that a little bit. You'll be very familiar with it, I think, from previous announcements and discussions we've had. Very happy to elaborate or recap on that, directly with you one-to-one. I think for the moment we're really just focused on the current situation. The backdrop is that Dacian's not met its production targets over the last year or so, and that's drained its cash. And that has been exacerbated by one or two other factors. There were some additional taxes levied in Romania. Obviously, the oil price has been softer in recent months than perhaps it was earlier when we first acquired Dacian. As I say, it has drained its cash. We are making and have made a number of changes there. We appointed John Burkhart, as I think we've previously announced. Jamie referenced him. He is an experienced guy from Hunt Oil in the US, and John is actually very, very, very active in helping us and looking at Dacian at the moment. We've restructured the leadership team at Dacian, and the new team seem to be settling in well. For example, there are some cost-saving initiatives, quite significant ones, which we have been talking about for some time, which they're actually just cracking on and doing, which is very encouraging. John and another individual he's temporarily got involved are currently really supporting the new team in a top-to-bottom review of all aspects of the operations and strategy for the business. So they're focused on sort of four main things. First is really developing a production plan to stabilize the base production, which has not something which the previous team had not really managed to get to. There's also a focus on improving the forecasting methodology and reliability, both on the production and the cost side. I think Jamie mentioned, identifying there are a number of potential promising upside opportunities within the estate, and they are very focused on a systematic sort of identification and evaluation of those, and also identifying the party capital that we could bring alongside our own to execute some of those opportunities in what the sector refers to as farm-out agreements, basically a third party providing their tools and resources and people at their risk in return for a share of the incremental production that creates. And finally, I'm not losing sight of the need to continue to explore these other potential upside opportunities that we've talked about. They are still, they still have a high degree of uncertainty around them, and they're a bit into the future, but they're nonetheless real and worth spending time on. For example, around renewable energy opportunities within our estate. So there are kind of four things they're focused on. And as Jamie said, John's work and the guy that's working with him is not yet complete, but we talk to them all the time, and we expect some feedback really during June. So as we've indicated, Jamie referred to, we've indicated this £2.5 to £3.5 million of capacity that we want to retain, potentially to provide further support to Dacian. Any support that we provide on that scale would only be done on the basis of a solid business case supported by the new team and really looked at through the lens that it clearly enhanced the realizable value of the business within a time frame that's going to work for LMS shareholders. So that concludes what I was planning to say on Dacian. On Castleview, well, we've already touched on that. We continue to see opportunities in the retirement sector. Clearly, we bought Castleview with the intention of using it as a, if you like, a sort of seed asset or a cornerstone asset to create a bigger platform in the sector. We are looking at opportunities. We're still looking at opportunities to bring third-party co-investment alongside us to start the process of expanding that platform. Again, though, on the basis that that would produce, that will create a more realizable or a better realization for LMS shareholders, again, within the sort of time frame that we're looking at for this managed realization exercise. So we continue to look at opportunities to maximize the potential of that investment, and indeed, the time that we spent researching it and looking at it and thinking about the sector in the run-up to actually buying Castleview. So in conclusion, our focus from here is really on optimizing the realization outcome for our various assets, and each of them has kind of different characteristics and demands. I think what matters to you, our shareholders, is the distributions that you're going to get from all this. I think, as Jamie said, we are very much hope to see an accelerating pathway on distributions from this point forward. So I'm very happy to take it as concludes what I was going to cover. I'm very happy to take any questions now or afterwards.
Sure, thank you for that, Nick. I'm going to use the document if you don't mind. So you may have these numbers by heart, though. In terms of the investment team, is it mainly you?
Is it mainly me? Yes, it is. Well, yes, it is, but supported by, I'll explain to you how we work. So if you look at the three mature investments, they're relatively passive. So we keep informed on them, but yes, mainly me. On retirement living, we have support on that. So we have a guy who is effectively the managing director of our retirement living business.
Sure.
He has finance support. We actually also have somebody who's well known in the sector who chairs that business. So yeah, there's quite a lot of support there. So I think the model is really to keep the centre as small as we can, but retirement living, there's obviously other resources there. Dacian is, I suppose, similar. Dacian, we have, as well as bringing John Burkhart in, we've really expanded what I guess you might call a supervisory committee. It's actually technically a board, but it's really a supervisory committee. So now Jamie is on that. I'm on that. Gary Cresswell, who is not in the room at the moment, is on that as well. These are all people from here, and I think we are just all, and indeed Robbie is also on that board. He's been on it for a while. So we are all very much engaged in speaking to the Dacian guys almost daily, actually, to ensure things are moving along as well as they can there. So yes, whether you call that a team or it's just bringing that expertise to bear and that resource to bear where it's needed.
Sure. And in Dacian Castle and Electoral, what is our kind of equity stake or potential equity stake if we converted the loans?
Oh, sorry, in Dacian?
Yeah, in Dacian, Castleview and Electoral.
Well, in Castleview we own 100%. We own 100% today, and if we repay the debt, we'll still own 100%. Yeah. So it's just 100%.
But our carrying value is 6.5.
Yes.
Our carrying value is 6.5. Yeah.
And in Dacian?
7.5. 7.5.
It's 6.5.
No, in Dacian.
Yes.
Is 7.
No,
in Dacian is 9.2.
Oh, I'm sorry. I'm so sorry.
No.
I should
Okay.
let you answer the figures.
So yeah,
by
sorry, the
contract.
percentage. I think you asked about the percentage stake
That's right.
if we do the
Oh, I'm
conversion.
sorry.
It's roughly 50%, roughly.
And effectively, we kind of control the operations in a way. The board and
Effectively, we are the
direction.
biggest shareholder by far. Yeah.
So in kind of, so when the production was going down and the kind of, there were issues in the internal of the companies, could it be that we would have spotted that earlier, or there's been some?
Well, the change, I mean, our involvement has stepped up a lot over the last, really since the middle of last year. Our involvement has stepped up a lot. We initiated the conversion from debt to equity, which is actually still finally legally to be completed in Romania, but it will happen. So we made that change. We put more people on the board. And, you know, as of the beginning of this year, there's obviously been this management change there. And I would say, you know, we're now very heavily involved, and Jamie in particular takes up a lot of your time, Jamie, doesn't it, Jason? And you know, it's really through Jamie's connections that we sourced John Burkhart, and that's all. You know, it's sort of relatively early days on this new approach, but I think thus far it's feeling that it's going to move us forward.
Sure, thanks for that, Nick. And in terms of when I see kind of which countries we've got exposure to, I mean, we probably got less than 5%, if that, 1.6. Electrical is the only technology company, right? Everything else is basically non-UK.
Well, Castleview is UK.
Yeah.
I mean, Dacian is obviously
8 out of 40, so that's 20% is UK.
Yeah, probably, roughly, yeah.
Well,
yeah.
the cash.
But in the cash, yes.
Yeah.
But
yeah. In terms of where the valuations are of the UK market, especially in the smaller company space, we are here, our companies are local. Why are we not investing in those kind of companies?
Sorry, why are we not investing in more UK?
Yeah, illiquid companies, which a lot of institution fund managers, unfortunately, me being one of them, we've got kind of these liquidity constraints. And the beauty about this lovely vehicle is you don't have any illiquidity issues in terms of, redemption issues.
Yes.
So why are we not taking advantage of that?
Well, you know, when we sort of reset our strategy a few years ago, we said that we're a relatively small pool of capital. So there's only so much you can do with it. And I think we made the call to focus on two sectors where we felt we had some competitive advantage, which was energy and real estate. So the real estate stream, if you like, has sort of turned into the retirement living opportunity. Energy is obviously Dacian. And we did for a while have a sort of other private equity category that we looked at. But I think we reached the view that probably our shareholders, and we talked to our shareholders, and obviously it's not a universal view because yours might be different. But you know, we reached the view that we're a smallish business and we can only do so much, and that we should focus on those two key things. There are people, maybe not at the very small end, but there are a lot of people in one way or another in that other private equity space, and we just felt that if we focus on things where we felt we had a particular competitive advantage, that would be the right thing to do.
Sure. I'll squeeze in one small one, Chairman, because I don't want to be a nuisance.
No, I think that's absolutely fine. You should go ahead.
Because when you say real estate is your core competency, given Mr. Rain's background, I mean, that's obviously that sentence ends there. I'm surprised that you said oil and gas, and oil is one of your core competencies.
Oil, well, the energy sector is a sector that we have, the LMS has been involved in its various guises over quite a long period of time. I mean, Robbie, I don't know whether you want to...
Mid-60s, we were part of a consortium called Century Power and Light, which started in the North Sea. So we've been in and around the energy sector for a long time.
Yeah. But we don't have a kind of operational experience on the board and things like that. Well, that is where I was coming from.
We have less in-house today than we did, yes.
I think I'll keep quiet and
That's
come
fine.
back later.
Okay. Nick, have you covered your
Yes, I have. So
your
I think we can go
remarks?
back to the sort of formal.
What is our protocol? So there are a number of questions from online. Do we normally cover those separately, Nick, or in the meeting? I can't recall.
Yeah,
now.
shall I just have a
Look and see
skim
what.
through them and just
Thank you so
see? I mean, if they've been covered.
Please.
I have one question, which is, I suppose it could be covered under the EGM, but I'm just flowing on from the previous questions. Given that the 1.7 million you referenced for costs was as an ongoing business, and clearly new investment is being shelved, assuming that the resolutions pass, I would have thought that, I know you may not be able to comment on specifics, but I would have thought that you'd be able to make a pretty decent reduction in subsequent costs from here on in terms of run rate. Is that something that you can comment on?
Let me try. We are, and Graham and Peter, you've been looking at costs particularly. Perhaps, do you want to pick up that one?
Yeah, sure. No, it's a good question. I think earlier on we did say that the run rate of the costs last year, annual run rate in 2024 was 1.75, I think. And we're looking to achieve a lower run rate by the end of this year of about 1.25. We've done the calculations on that. There are some easy wins. There are others that are more difficult. Well, one of the things is, although yes, we're not making new investments, we've got to manage realization and make sure that that's done cost effectively. But then the following year, I think we'd look to eat into even that figure of 1.25 and get it down further.
Okay.
And I just add to that, I don't know what the exact proportion is, but the cost of being public is not an insignificant part of that. As part of our shareholder consultation, we sounded out shareholders as to whether we should, in fact, essentially do a managed private liquidation. And the feedback we had is that would be problematic for shareholders, at least until we've returned a lot of cash first. So we're not looking to change that listing other than going to the B shares for now.
Okay, well, thanks for that. If I can sort of
Please
respond to both of you.
Yes, please.
Thanks, Graham, for that. One thing that just begged a bit of a question when Nick was explaining about the support for Dacian, which is quite heavy in terms of this board that's floating. How much, if anything, of the cost of that board is being borne by LMS in a direct sense? I know we're paying for Nick's salary, but is there a supplemental cost on top?
We have historically been charging a management fee to Dacian that has been accrued. It hasn't been paid currently yet. As with stabilization, we would hope to be able to get repaid for what we owed for past periods and to do that. So at the moment, there is no offset, but there is accrued quite material offset that we hope to and expect to recover as part of this on the cost side, if that answers your question.
Well, I suppose it does help, but perhaps to clarify, and sorry if this is personal, but take, for example, your role on
the Dacian board.
Dacian board.
Am I being compensated for it? No.
Oh, okay. So, because I mean, it wouldn't be unreasonable if you were charging a supplement for being.
I'm not.
Okay.
Nor are the other board members.
Okay, so that's good, I suppose, and it would be nice if we got some management fees out of that with a bonus. I think in terms of the comment you made about going private and saving money, which is somewhat in vogue at the moment. We've had some experience in those, and you can almost look at extremes. If you go to a point where you treat your shareholders as strangers, using an expression that's in vogue at the moment, you can basically slash a lot out. You give them no information, you sort of send them the statutory documents. Maybe they could organise some sort of very minor trading facility on some platform, but essentially, I think you're doing yourselves a disservice and actually treating your shareholders badly. Yes, if you go to that extreme, I'm sure you can save quite a lot. If you actually say, well, we're actually going to treat our shareholders properly and say, yes, we'll reduce things, but we are going to keep them informed and we're going to, I suppose, uphold good standards in terms of accounting and reporting. I don't think the savings are as much as perhaps sometimes people assume. It's
you can strip it down. That's what you're saying, and still keep the listing. And I think that's what we're aiming to do, isn't it?
Well, I think that as you said, Jamie, the very clear feedback from key shareholders was to maintain the listing for the time being for several reasons. I think one, liquidity. It's an illiquid market, but still opportunity to sell in the market. So that's a possibility. But then there are also corporate governance implications. Of course, we're listed, we have to comply with rules, we have to make announcements, we have to update shareholders. And the flow of information is mandated by that. And so I think shareholders at the time being at least felt that was something they wanted to achieve.
Yes, I mean, if you got down to one asset, then you could get to what we say, well, that probably doesn't.
That's another aspect to it. I think we have it in mind that, yes, if we get down to a rump of assets, would it be appropriate then to save further costs by delisting? And that's something very much we have in mind. But for the time being, I think we'll maintain the listing because of those advantages.
Thank
you. Nick, is it on the online questions? Is there anything you want to summarize
the
now?
Online, I don't want to be evasive on the online question. The online questions, there's quite a lot of detail in some of them, and I think we could get a bit bogged down. I mean, to an extent, some of them have been covered. So, one of them is sort of just expressing frustration at the investment performance since 2020. There's the question about Dacian, which I think we've at least in part covered. There's a question about why would you put more money into any of the investments, which I think we've talked about. There's a sort of fairly detailed question about Castle View. More question about Dacian. I think we have covered it. And what I would like to say to those online questioners, I'm very happy to sort of talk to you directly and try to answer your questions in more detail. I think it will kind of get very repetitive if we try and do it here.
Okay.
I'm not quite sure. I will ask investors in Meet People what the protocol for doing that is, but I'm very happy to do that.
Okay.
What we've done in the past is if they're very detailed questions, then you'll deal with it offline and send them thorough response.
They're probably from. Actually, there's three different people who've asked two questions each, effectively. So, very, very happy to talk to those on an individual basis. I think we probably partly covered the questions. I expect there's probably some detail they would still like.
Okay. Any more questions from the room at this stage? No. All right. Okay. In that case, thank you, Nick, and thank you for all the questions, everybody. I think we should move forward to the formal part of the meeting with your permission. And I confirm that a quorum is present. Is that correct, Lorraine? And can I have your consent to take the notice of meeting as read? This year, we'll be taking all of the votes on a poll. Under Article 53 of the Articles of Association of the company, as chairman of the meeting, I call a poll on all resolutions in order that the wishes of all members, including those who've lodged proxies, may be taken into account. And is there anything we need to say on that at this stage, Lorraine?
No, I think on the basis of the proxy figures, we've got over 90% of the votes are cast in favour of each of the resolutions.
This is for the AGM?
Yes.
Okay. All right. Thank you. Poll cards will now be distributed. I think that's in your court,
Yeah,
Lorraine.
shall I just read through this very briefly?
Thank you so much.
So only members of the company or their proxies are entitled to vote. If you're a member and you've already voted by proxy and you don't wish to change your vote, you don't need to complete a poll card, as your proxy vote will already be counted. So I'll bring around the poll cards in a moment to those who are members, and please, it's fairly clear what to do, but I'm happy to answer any questions. I'll assume that your vote is over all of your shares. If you only wanted to vote some of your shares, you need to write the number on the poll card that you want to vote. Then simply put a cross in the for or against each resolution, and then sign the poll card. You can only vote shares which are held in your own name. If your shares are held to a nominee, then the votes must be cast by the nominee on your behalf, unless you've been appointed as their representative, and I know some people that's the case. So I'll just now...
Great, thank you, Lorraine. Please.
May I just ask one question?
Of course you could.
It hasn't been covered, so it's actually on resolution 13, and I know it's slightly touched on in the EGM, but we're voting on it now. Just on the buybacks, reading in the EGM, there was a comment that because of the Rain family, they call it concert party, that the company couldn't buy any shares back without being in a Rule 9 situation unless it got a whitewash, which we all know is quite time consuming and ridiculously expensive. So on that basis, is there any realistic prospect of there being any share buybacks under this authority?
I think it's unlikely. I think the advice was to reserve that as a standby in case we needed it, but I think it is unlikely.
Does that answer your question?
Yeah.
Okay.
I thought it was...
Thanks, Ray. Okay. Can I well, sorry, I didn't wish to rush, Blake.
Then we're done.
All right. Lorraine, are we done on polls at this stage?
Yes, you can just finish. I think it's just the last little bit to finish up on the script.
So I think that I'm on the last paragraph. Ladies and gentlemen, this concludes the business of the meeting, and I thank you all for attending, whether in person or via the platform. The board will be here for a little while. Well, we're going straight, in fact, to the EGM. What have I missed, Lorraine? Sorry.
The result, we'll count the votes after both meetings, and the results will be announced to the stock exchange this afternoon or as soon as they're...
Thank you. Thank you. So that concludes the annual general meeting, and we'll now move to the general meeting to address the special resolution proposed in the circular. So good morning again, everybody. Right one. We now come to the general meeting of LMS Capital PLC, and I declare that meeting open. As for the AGM that's just ended, this meeting is being broadcast through the Investor Meet company platform to accommodate shareholders who are able to be here in person. Also, as for the AGM, those of you who have joined us via that platform are observers rather than legally participating. On 13th of March, we announced our intention to pursue a managed realization for the company, and a circular was published with all of the details on 24th of April 2025. Nick's already made some comments on the background, as have I, and unless anyone has further questions, I don't propose to repeat what's been said. Please.
I have a question, but it's not been covered, so I thought I might.
Not a problem.
There was one thing in the new investment policy that seemed a bit incongruous, which was the ability of the company to borrow money, given that we were giving it back and not reinvesting. It seems strange that the company itself would borrow money. I understand that Castleview might borrow money, so
Why?
someone could explain why that.
I think it's another of these where the suggestion was I mean, it's there in the investment policy at the moment, obviously, and the suggestion was to kind of keep it there just in case that unexpected it is. I don't think there's any. It would be difficult for us at the moment to envisage a scenario where we actually did that.
Okay, I thought that's probably answered because the lawyers will always say you might as well have it.
We always got to listen to the lawyers.
Very good.
Other questions before we vote, please?
Just kind of, I've not read every, and I don't know whether there's a line in this document that changes the whole meaning of the document, so I'm not aware of that. But what is the plan roughly? Are we kind of we're going to sell this? We're going to kind of use our portfolio, and are we going to issue these delisted shares at the end of the journey, or are we going to give it out as dividends? What's the rough map that we have in mind?
There's two questions there. What is the time frame and what is the B share process? Is that correct?
And they may not be used at all. I don't know really.
So on the time frame, Nick, we've indicated that we're not setting a specific time because we want to maximize assets, but that our rough goal is in the 2-year framework. On the mechanics of the B shares, you can answer that better, Nick.
I mean, the B shares are really just a device to enable cash to be returned to shareholders. So the first issue of B shares will be that initial distribution for which we need to go through the court process. That is probably sometime during July. And then as and when we have further amounts to return, we'll issue some more B shares, which will really then be the mechanism for getting additional cash. So there will be more than one B share issue. It won't just all be at the end.
Yeah, but why not a dividend?
Because the B shares mean that the distribution is treated as capital rather than income, which is generally better for people.
Good.
Sorry to
No problem.
To ask a question, but it does sort of flow a little bit from Nick's answer, and also I suppose from just what was said at the AGM. You're 12.5 million of cash. You're giving one back, so you've got 11.5, and you're reserving some for Dacian, which I have to say, based on how you've portrayed it, seems likely you're going to spend that. So let's call that 3. Say, so you're down to 8.5, keeping some back for costs. So it might be 5.5. Some money for Castleview, maybe a couple more. It seems to me that if everything goes to plan, you would expect some of that residual cash to come out this year and then be supplemented by mature investment. So I suppose the slight flip side is you could also have to say, well, if you want to be very conservative, you won't distribute anything more over the £1 million until you sell something. So I don't know if you can give us any flavour on where you are in that continuum.
I have an answer, and you can correct me, or no, you probably.
I don't. I mean, I think you're right, Blake. So that's at one end of the sort of conservatism spectrum, and that's I think where we are today. So what could change that? Obviously, as and when we realise things, and probably the first things to be realised, the earliest things to be realised are potentially the 3 mature investments that I talked about. I don't think they'll all be realised suddenly, but we might make a start on those. I guess the other thing that could change that would be if we get through the machinations that we want to go through with the Castleview refinancing. As I said, if we did it today, we'd have to refinance 5.2 million. Now, we actually think the amount will be lower than that, but if we're being prudent and we did it today, we'd refinance 5.2. It may be by the end of the year that actually that refinancing is down to a smaller number, in which case, potentially that could free up some more. But I think we've been quite conservative to begin with.
Yeah, I mean, I can understand that at the start, but I suppose if we were sitting, well, not so much if we're sitting there, but if we're shareholders, and it's the end of October, so if you're into November, then one would hope that perhaps some of that conservatism
I think
would be released a bit.
Yeah, and I think we touched on that, or we tried to in the earlier remarks, where we said that we hope to accelerate from here, not just generally over the liquidation period, but indeed in 2025. So that's a hope, not a statement, but it goes back to what you're saying, that so if you look at those three elements, we're trying to get costs down as much as we can, and the anticipated potential refinancing of the debt on Castleview, if we do that, would be a bridge that we would hope to bring down materially. So if all of that happens, we should hope to have further distributions in 25. There's no guarantee of that, but that would be our hope.
Okay, thank you.
Of course you may.
Very quick one. So does this approval now kind of, is that the commitment from the board that is the path? Or let's say, I gently identify a target in which we could merge into and make this a bigger trust. Would that be an open idea that the board would be open, or is this now a closed chapter?
I think our obligation as a board is to maximize shareholder value.
Sure.
And so we have to look at everything through that lens.
Sure.
So the managed realization is an approval of a new path. During that path, we will and should always consider whatever we think at that point maximizes shareholder value. If that answers your question.
So you're saying the objective is to maximize value. It's not a commitment to close it down and shut it.
Correct.
Super. Thank you so much.
I think we've covered any questions. I don't think, do we have more from the platform at this stage, or?
No further questions, sir. There are no further questions.
Thanks so much. So we'll now move to the formal part of the meeting. As for the AGM, we're taking all of the votes on a poll. Under Article 53 of the Article of Association, as chairman of the meeting, I call a poll on all resolutions in order that the wishes of the members, including those who have lodged proxies, may be taken into account. So that's, I think, your cue, Lorraine. Do you need to distribute further?
Yes, I do.
Votes. Thanks so much. Thank you. Thank you. Thanks, Lorraine.
So fewer resolutions, it's a bit quicker. Thank you.
You collected all the.
Just waiting for this. Very good. Thank you.
Lorraine, do I need to ask you to read the poll script from here?
We're all done. I think it's just for you to, it's the same, that we'll put the results up to the stock market and on the website.
And that'll be up today, is that correct?
Yes, yes.
All right. So I think we've completed the general meeting. Thank you all for attending, and obviously we'll be available for follow-up questions both now and any time you like. So thanks very much, everybody.
Thank you. Right.
That's great. Thank you very much to the board. We'll now redirect investors online to provide you with their feedback. Good morning to you all. Thank you.
Bye-bye.
Thank you.
Thank you.